2023 was the lowest sales in Toronto's real estate market for over 20 years. Did the market bounce back in January 2024? In this video, I want to cover two topics. First, take a look at what happened in the month of January of this year. And second, discuss the upcoming interest rate cuts that everyone is looking forward to. Before I get into these two topics, if this is your first time here, I'm Nawar Naji, a real estate broker in the city of Toronto. In these videos, I share market insights, government policies and how they impact the housing market, and tips to help you whether you're a seller or a buyer. Feel free to reach out if you're looking to make a move in the city of Toronto, and make sure you like and subscribe. All right, so we'll start by looking at the January data for the city of Toronto. So what I track are three sections of the market. So I take a look at the detached in the 416, so in the city of Toronto. Then I look at the semi-detached in the city of Toronto. And last but not least, central Toronto condos. So this is Bloor to the Lake, DVP to Dufferin, because the majority of the condos are in that core section of the city. Let's start by looking at the detached. So take a look at the month of January. So last month we had 342 sales. There were 739 active sales. The months of inventory was 2.16, which is considered to be a seller's market. So anything under 4 months of inventory is considered to be a seller's market. 4 to 6 months is a balanced market. And anything above 6 would be considered a buyer's market. The average detached for the city of Toronto was 1.57, with the median at 1.249. Median is a good indicator because that tells us where most of the trading is happening. And again, because of the higher interest rates, they have come down a little bit on the fixed side. Still, though, they're extremely high. That product of 1 to 1.5 million in the detached space is what's really moving pretty fast. And you can see there the median for the month of January was 1.249 with 34 days on market. Now, it's good to look back at the same month the previous years. Keep in mind, after COVID, things were completely out of whack with, market coming down, taking off, coming down. It's been a roller coaster the past 4 years or so. But you can see if we take a look at it here, this January we had 342 sales. Last January was 318, which was high interest rates environment. And 2022 was 476. So if you recall, 2021 and the first 2 months of 2022, real estate market was extremely hot. There were a lot of sales, record prices. And in March 2022, that's when the Bank of Canada started the aggressive prime benchmark rate, I should say, increase to cool off the market. So up till then, end of February of 2022, sales and average prices were up there. So you can see in January 2022 was 476 sales at almost 1.9 average, with 1.57 median for a detached property in the city of Toronto. We've come down quite a bit since then, from 1.57 to 1.429. So you're looking at 300 and change $1,000 drop from 2022, the peak of 2022 to January of 2024. So we'll see how things are going to move forward as we get into the spring market. Again, January is one reference point. There has been more activity. There have been multiple offers depending on the price point. But again, we'll see how that's going to play out moving into February, March, April, and May of this year. Now, looking at the semi-detached in Toronto. So for January 2024, we had 106 sales versus 84 the previous January. The active listings were less, 137 compared to 200. And the months of inventory this past January 2024 was 1.3 compared to 2.3 of January 2023. So clearly, things are active in the semi-detached. Now, keep in mind also in the city of Toronto, there aren't that many semi-detached properties. So you'll see the sales are pretty low, 106, 84, compared to the detached and especially when you compare it to the condo market. Now, the average price was just under 1.2, we can call it 1.2 million versus 1.15 of last January, 2023. So that has gone up. And the median is pretty much flat, if you want to call it, because in 2023 it was 1.08, now it's 1.087. The average price was up by 4%, median is pretty flat, and the days of market is just around the 29 days, so about a month or so sitting on the markets. Now, if we go back and look at it compared to January 2022, you can see sales were 144 higher than now. And then the months of inventory, 0.72. That's basically whatever comes on the market will go. And this is why the average was under the 1.5 mark. It's 1.471 million and the median at 1.361 and 9 days on the market only. So pretty much listed, hold back offers, and off it goes in 2022. Now moving to the condos downtown. So let's take a look at this here. This is central. So again, Bloor to the Lake, DVP to Dufferin. We had 576 sales compared to 380 in January 2023. So that's a positive indicator. However, you look at the months of inventory, it's 3.75 compared to 4.46. So this is actually a good sign compared to last January. It has come down because if you look at in the last few months, pretty much since the fall of 2023, we pretty much got into close to that 6 months of inventory, which is edging into that buyer's market territory, and it kind of stayed there on that six, just under six, and it dropped in December and January. So we'll have to see how that's going to play out in the condo market, because it's not just the resale market, because there are quite a number of new construction condos that are being completed. It was over 20,000 completions in 2023. There should be around the same 20 to 25,000 new completions in 2024. So that's more supply coming into the market. So we'll see how that's going to play out in the resale market, because some of those condos for the buyers, they're going to have a hard time closing because of the high interest rates. And at the same time, the investors who bought thinking that rates would be low for a very long time, obviously now with rates being in the high fives into the sixes on the fixed side, they'll be forced to sell because negative cash flow, there's only so much that could be carried. But once you get into negative 1,000, negative 1,500 a month, obviously these investors are going to have a hard time holding on to these properties, and some, I should say, will be choosing to sell those condos. So we'll see how that's going to play out as we move into the spring market for the downtown core condo market. Now, if we compare this past month, the January 2024 to January 2022, it's almost double, if you want to call it. It was 966 sales. The average was 803 versus 762. And the median was significantly higher, 729 versus the 650. Now, the other thing to look at is the days on market. In January 2022, it took 21 days to sell a condo in a strong seller's market. Now it's almost double, 41 days. So again, you can tell there's a lot of resistance, a lot of headwind, because the condo market, it's, you can look at it in two ways. One is the potential buyers are first-time home buyers who are having a hard time qualifying because of the higher mortgage rates and inflation and cost of living. And on the other side, investors. Obviously, for investors now with higher interest rates, cash flow doesn't make sense. And, they're not really attracted to buying these condos when interest rates are so high. So you can see that's reflected in the days on market, which pretty much doubled from January 2022 to now, from 21 to 41 days on market. Okay, the $1 million question is, when will the Bank of Canada start cutting its benchmark rate? There's been a lot of talk in the media about 100 basis points, about 150 basis points, which is, 1 to 1.5%. There were talks about April, June, fall, and really no one knows. But one thing that I want to share is this article that caught my attention in Reuters.com. The Bank of Canada governor gave a speech in Montreal a few days back, And this is what he said, quote, "We can see monetary policy is working to bring down inflation, and we need to give monetary policy more time to ease the remaining price pressures." This is key because he's basically saying, inflation is back up to 3.4%. It was at 3.8. It was, I believe, October of 2023. November and December dropped to 3.1. January went up to 3.4. And the next set of data for the inflation will be coming out on February the 20th. So we'll see where that ends up. Keep in mind, the target inflation for the Bank of Canada is 2 to 3%. And they probably want to see a few months of CPI well within that range before they start cutting the benchmark rate. So my message here is to be a little bit more patient. I mean, really, no one knows if it's going to happen. I don't believe it's going to happen early. I think it'll be late into this year. But again, we'll have to see the economic data, what the numbers look like, and what information will be available for the Bank of Canada to decide it's time to cut the benchmark rate. Now, the other factor too is on on the south side of the border, the U.S. economy is very strong. Strong economy creating 353,000 jobs in January, 216,000 in December, and 173,000 in November. Their unemployment is 3.7%. Again, their economy is very strong. So those numbers give their Federal Reserve more runway to be patient when it comes to cutting interest rates. And the reason that is important, because the Canadian dollar, if the Bank of Canada starts cutting earlier than the US, the Canadian dollar drops, which makes importing products a lot more expensive, which causes inflation. However, it will help the exporters because now the Canadian products would be cheaper. So couple things to take away from this segment of the video. One is we need a few months of solid data showing inflation is well within the 2 to 3% range, which is mandated by the Bank of Canada. And we have to keep an eye on the US to see when they will start cutting their benchmark rate because the two central banks move together, historically speaking. I hope you've enjoyed this video. I know that I shared a lot of information here. If you have any questions, feel free to leave a comment below or reach out. There's a link to contact me directly. I'd be more than happy to chat with you and to make sure you like and subscribe, and I'll see you on the next video.